Planner, presented by the Bombay Stock Exchange, IPF.
Hello and welcome. You're watching Financial Planner. This is the brand new Financial Planner where we're back. We're talking not just about financial planning because we've talked about that a lot. And if you've been following the show, I'm pretty sure you've picked up on the basics. But from now on, we'll start talking about the stock markets too and how you as a regular investor, just like me, can actually start looking at the shares and stocks and then learn the basics of that. Alright, I have with me Sumit Ved. He's a friend of the show. He's also a certified financial planner. Sumit and I will first talk about the markets and what you should know about the markets, and then we'll go on to take some viewer queries. Remember, if you have any queries, you can always email us at financialplanner@utvmoney.com. If you missed the show, hey, go to Facebook. I'm on facebook.com/Smriti Rao. You can email me over there. You could also leave some comments on what you'd like to see on the show, or just watch the clips of the show. That's good enough for us. All right, Sumit, welcome. Thanks for coming on. So let's get started with talking about the stock markets. The last time, of course, we were talking about what is a share, and I was talking about a friend of mine who's really interested in these companies, and she wanted to pick up some shares, and she was like, where do I go, and is it safe? Who's taking, and if I have a problem with my shares, who do I get in touch with? So we talked about stock exchanges and SEBI, who's our regulator. He takes care. SEBI will take care of your problems if you have any with your shares. But if I'm a company, Sumit, how do I get on the bourses?
Sure. I think I'll start by articulating SEBI's role. It's not about taking care if you have a problem. SEBI is a regulator which is very actively pursuing the cause of retail investor by making guidelines and regulations which are in such a way that it will not enable any market participant to take a small investor for a ride. Right. Now, within that, there is a role and responsibility of various participants, including the investor, that who accesses the stock market, he needs to understand what he's buying, why he's buying. So there's a responsibility to us as an investor also. And if we do everything right as per the regulation, the way SEBI prescribed, and if there is a problem, SEBI definitely has a redressal system which is pretty proactive in terms of helping people to really get their complaints redressed, along with the stock exchange redressal system. Bombay Stock Exchange has a very good redressal system. National Stock Exchange has a very good redressal system, along with SEBI. So it's a very well-defined system, and people need to take advantage of it. Now comes to the question, which was how do we get listed in the stock exchange? Now, listing is a very important process in terms of equity market behavior for a company, because what listing does, it enables the company to give liquidity in its stocks in terms of ability to investor to buy and sell that particular company's stock on the stock exchange.
So, but what does it mean in English?
Simply what it means in terms of English is that there is a company whose shares are now easily tradable in terms of buying or selling at a stock exchange, which was not there before listing. So as soon as I get listed, let's say I get listed on Bombay Stock Exchange. On Bombay Stock Exchange, the market price, at what price I'm able to buy this particular share, I can sell this share, is now available. It's a listed stock exchange. There are unlisted companies also. That means they have shares, but they are not listed. So there's no way to figure out what is the right price to buy or sell them.
Right. We'll talk about unlisted shares and unlisted companies in just a little bit, and what are the sort of pitfalls associated with that. But for the listed companies, Sumit, like you said, if you're a company, let's say Sumit and Company, you're listed on the Bombay Stock Exchange. So for you, that means you have to adhere to the rules and regulations of that exchange. You just can't be there and just be like, hey, welcome to the club, and that's about it. It's a select group of companies, and it has its rules and regulations. Can you tell me what those are? So if you're listed there, what are the things that you have to keep in mind as a company?
See, the first thing which a company needs to do in order to get listed is to come up with the initial public offer. And that initial public offer is through an offer document which gets approved by or which gets vetted. Approved is not the right word, vetted by SEBI in terms of whether this company is capable of being listed. Does it have good track record of performance? Does it have good, strong management? Is it doing what it is saying, in terms of business model itself? It's not one of those fly-by-night kind of an operators. So all those things get checked and verified by the regulator before it vets that they can come up with an IPO. At the IPO stage, a company gives an open offer to large number of investors, either through newspapers or through merchant bankers or brokers, saying that I am looking at coming to get listed at the stock exchange, my offer price is X. For example, Sumit and company decides after getting approval from regulator that I need to come up with an initial public offer at 100 rupees. So you will go and say, please buy my share. Each share's value is 100 rupees. The logic of it to be 100 is XYZ. I have to give it in my offer document. You will do analysis on this, take expert advice from financial planners, brokers and advisors. They'll say, yes, this is a good price to invest or not good price to invest. People will subscribe to it, give money to company. Based on that, it will get listed on the stock exchange.
Sure.
The day it gets listed on the stock exchange, a market participant, which are buyers and sellers and other investors, try and say, yes, 100 rupees is a good price. They come and buy more. 100 becomes 120. If they say, no, 100 is too high a price, they sell more. 100 becomes 80. So from a market listing point of view, the day it gets listed, the demand supply starts playing up.
Right. And that determines the price then.
That's right. That's how the price goes up and down. So this is the whole process of initial public offer, which we need to be cautious about when we are looking at investing, and more so IPO. I am talking about it because in India there is a culture of investing in IPO and making a quick buck and moving out.
Yeah, which is the other thing. I think you raised two very good points over there. One of them is that if you are a company that's listing on the bourses, there's an incredible amount of openness that you have to bring. They're saying that this is what my company does, these are the financials. And if you're an investor, always remember you can go to the SEBI website, which is sebi.gov.in, and on that website you do have the draft red herring prospectus that allows you to take a look at, you know, what all the disclosures made by the company. And within that, I think the most interesting thing and the important thing for investors is to see that they do list out the risks. The company makes a very open disclosure saying that, look, I have X, Y and Z court cases pending against me. We have these liabilities. So, you know, we do have those things, or, you know, whatever the associated risks are clearly spelled out in that prospectus, and you should take a look at it before you make any sort of decision about whether you want to go ahead and invest.
And
so
on
I
top
think
of
there's
it also,
information available.
Smriti, what happens is a lot of research houses, a lot of brokerage houses does the research on that particular IPO, and they come up with their report. So they'll say this is what company is doing their businesses, and this is what their potential is, and this is the price at which they want to come up. Our research says that yes, this is right, there is a lot of potential, so they'll say recommend buy, or some of them will say no, this is too high a price, the business potential is not very good, wait for some more time before you buy. So they'll say hold. So do consult these kind of research reports. They are very, very extensive.
Also, Sumit, there's something, what about credit, what about ratings? Because we know that sometimes when we talk to experts, we say, hey, what is your rating on this particular IPO? And they say, and they give a grade for it. How should investors be looking at those grades?
I think that rating of IPO is still in infancy in India. It's a new concept. It's still going to take some more time to really get established. My real advice to people will be, instead of getting into rating, get hold of a good advisor, you know, who understands equity market. And these advisors can be in form of brokers, they can be in form of financial planners, investment bankers, investment advisors, etc., etc. And do see that they are very well qualified and what their track record has been. Based on your advisor's, you know, perspective, try and choose companies and businesses which you understand. It's always better.
Right.
Do not go for a fad. Do not go for a fad for a company which is doing very well and the IPO is also going to go do very well, and hence you go and invest. If you don't understand it, do not invest. Buying equity is like buying businesses. And when you buy businesses or when you invest in businesses, you invest for a longer period of time after understanding what that business is. Yes, for a retail investor or a lay investor, it's tough to understand all these things. Hence, it's very important for you to get a right kind of advisor who will help you do this.
Get professional help, basically.
That's right.
If you can't do it on your own, don't be afraid to ask for help.
True.
Alright, let's take a quick break right now. When we come back, we'll catch up with the email that we got. It's about a girl. She wants to buy a house and a car, but to buy that stuff, she says, should I get rid of all my investments and put my money over there? Is that a good idea? Well, we'll find out what Sumit has to say after the break.